Welcome back. Amazon stock technicals to watch from here. On Friday, stock closed at 34.44, 1% down. And what to watch from here now. So this is a daily chart of Amazon. You can see all-time highs 37.73, and it tested very recently that level and it didn't break out. It came right back down to its moving averages. So if we pull up moving averages for Amazon, you can see at the moment stock is sitting right at its 50-day simple moving average, and couple trading sessions back, pretty much when market overall dropped, Amazon tested its 200-day moving average 2 days in a row, and it bounced off of there nicely. But it's not as up as much as other FANG names. It's definitely underperforming the market. If you look at it, okay, so from here, let's take a look at the resistance. So these are the support levels I'm watching, 50-day and 200-day, right? To the upside, I'm watching as a resistance more of a 35.50, and then above 3600, and then 37.50 all-time highs. So let's take a look at it on a different time frame. So from here, well, on a weekly chart, you can see stock has been in this consolidation for quite some time. So the only good thing here at the moment is stock is at least making higher lows, all right, but we're not making higher highs yet. So also, if let's switch to different time frames. So if we switch to monthly chart, you will see how long this stock has been in this consolidation between 3200 and 3500 basically. So it's been almost 1, 2, 3, 4, 5. So the entire year, basically entire year, stock has been in this range. And I do think that this stock can join the party, the FANG party, because look at this stock year to date. So why am I attracted? I'm not buying the stock yet. I'm not trading it yet. At the time of filming this video, I don't have any position, by the way. But I'm attracted to this stock into the year end. If we see overall market rally, look, these are the yearly candles. Look how much it's up year to date. So let's measure this move. So year to date, Amazon is only up 5.6%. versus overall market S&P 500, I think 20+%. Nasdaq 20% plus. If we look at the Microsoft, let's take a look at Microsoft, Apple, and Google. So this is Microsoft. Year to date, Microsoft is up 54%. What about Apple? Well, Apple is doing very well as well, outperforming the market 34.5%. And it's still going. Google, how much Google is up? So Google is up very nicely as well. Year to date, if you look at it, 69%. So these FANG names outperforming the market by like 2-3 times, while Amazon is either lagging, or if it falls those like ranges, if stock does fall this range between 3200 and 30, pretty much if it does fall below 3200, that's not looking good for Amazon, because well, it opened in the beginning of the year at 3270. So maybe even 3270, if it does close below, that's not looking good. But on the other side is that this stock has maybe more juice than those stocks that a lot of people are chasing. Of course, it has been pretty difficult year to trade this name, but I'm interested for the breakouts for this name, and maybe very, very possible the stock can hit 4,000 by the end of the year, even though it has, we have pretty much short Christmas week and maybe like 12 full trading sessions, maybe 13, 14 maybe. So, and it's very short period of time, but let's see if there is any hint on a 5-day moving averages. So stock, there is a bearish sign right here for me personally, that stock closed below 5-day for the momentum traders. And also, if you look at this drop, This blue line on my chart represents 5-day moving average, by the way. And look how many days when stock stayed below 5-day, it kept coming down. And as soon as it got back above, it started holding up, and Friday closed below. But these moving averages are more pivotal, 200-day and 50-day. So let's see what happens with those. But I'm a little bit bullish, biased versus bearish, even though if you look at the momentum right here, right now, well, it's to the downside for the past month. All right, and we had this bearish crossover somewhere up here at $3,600 levels. So, and also, well, what else we can look at here? So let's have a look at maybe volume bars. Where is the well, at least on a daily chart, what's going on here? Maybe I'll go back 2 years from here. So if we look at volume profile, well, you can see that this 3350, 3300, that's a very, very solid support area. So even if this stock slips below these 200-day moving average area, well, there is a support right here at 3300. So I want to put support right here. So that's the level I would watch, and I would watch that level as a relief bounce zone. But on a bigger scale, also, if you are someone who follows these kind of trends, maybe it's looking like a right here, a bit of a head and shoulders here. Maybe it's forming a shoulder here, and well, you can draw as a trend line, you can draw the neckline somewhere right here and say, hey, if it does slip this 50-day or even 100-day, 200-day, yeah, it's looking bearish. It can come down to 3,300, and then maybe potentially to 3,200. That's the possibility. But by the end of the year, if you look at the option activity, let's take a look. What option market is pricing in by December 31st for Amazon? $183 move up or down. So that's pretty much 30% implied volatility. And implied volatility is not big for Amazon. It's pretty well market, I think, because the stock wasn't moving as big, even though it was moving with decent range, like from 3,700 to 3,200, 500, all move up or down throughout the year. The more option market by the end of the year, it's not pricing big of a move. So maybe 5% move from here, 189, maybe 6% move. That's how much it's pricing in, up or down. So if it does come down 200 points from here, well, it would bring it right down to these 3250-ish areas. And if it goes higher from here, 200 points, it would bring it up to these 3650-ish areas. But that's what I'm watching for Amazon. Hope you guys liked it. Don't forget to like, subscribe to see more content like this. We do these kind of videos every single day. So thanks for watching. See you in the next one.